Dear student, Assalamu alaikum. I hope all of you are fine by the grace of Almighty Allah. I am Mohammad Shahjahan, Assistant Professor, Department of Accounting, Milestone College, Uttara, Dhaka.
Dear student, today we discuss depreciation. This is our fourth lecture in this chapter. Dear student, at the end of this lecture, you will be able to calculate depreciation. You can give journal entries for recording depreciation and you can prepare ledger. Dear student, we have taken a problem of Gibran Traders. Gibran Traders purchase an air conditioner machine for office at Taka 1,55,000 on January 2019. Its installation cost is Taka 5,000. The scrap value at the end of economic life is Taka 10,000. Its economic lifetime is 10 years. The accounting period of the company ends on 31st December. Dear student, this is our problem now. Requirement is calculate the amount of annual depreciation under straight line method. That means we have to find the amount of depreciation under straight line or fixed installment method. You know that straight line and fixed installment method are same. Dear student, so let's see the depreciation. If you can remember, last class we have discussed the formula of straight line method. All of you know that in straight line method the rate of depreciation and the amount of depreciation, how we can calculate. Let's see. Dear student, annual depreciation equals to total cost of asset. Annual depreciation equals to total cost of asset minus scrap value divided by economic life. Annual depreciation equals to total cost of asset minus scrap value divided by economic life. The math, look at total cost of asset, purchase price is 1,55,000 and its installation cost is 5,000. That means total cost of asset equals to 1,55,000 plus 5,000. 1,55,000 plus 5,000. 1,55,000 is purchase price, and with that we have to add installation cost. All of you know that all the direct expenses for purchases of purchasing asset will be included with its purchase price. Then it is total cost. Today this is important formula for finding the total cost, because for total cost we need purchase price plus other direct expenditure. In this math we have only one direct expenditure, installation cost. Moreover, we may have import duty, dock charge, carriage, all are the cost of purchase of machine or any asset. So that will be total cost. That will be total cost of machine. So total cost of machine is 1,55,000 plus 5,000. It will be 1,60,000. Then we have to subtract scrap value. Look at the end of economic value, Taka 10,000. It is the scrap value or residual value. So dear student, let's see the calculation again. Total cost of asset 1,55,000 plus 5,000 minus 10,000. It is scrap value divided by 10. That means 1,60,000 minus 10,000 divided by 10. 1,50,000 divided by 10. 15,000. So dear student, yearly depreciation is 15,000. Yearly depreciation is 15,000. So I hope you understand the calculation of depreciation. This is very easy one. So in this way we can determine amount of depreciation under line method. I hope all of you can. Dear student, now requirement B. Show the journal entries from the above information from 2019 and 20. For 2019 and for 2020, we have to show journal entries. You have to show the journal entries. So dear student, for journal entries, last class you have learned that for journal, at first we have to give journal entries for purchase of assets. So if you purchase any asset account, here we purchase office equipment, so office equipment account debit and our bank money will decrease for purchasing assets, so bank account credit. That means for buying any asset, concerned asset account will be debit and bank account credit. If we buy a machine account debit. If you buy furniture, then furniture account debit and bank account will be credit. That means whatever asset we will purchase, that asset account will be debited and bank account will be credited. The amount is 1,60,000 because 1,55,000 is purchase price. We have to add installation cost also with this equipment. So the total cost is 1,60,000. 1,60,000. Then At the end of 2019, we have to give two journal entries. First one for recording depreciation, depreciation account debit, accumulated depreciation account credit. Last class also we have learned for recording depreciation, the journal entries is depreciation account debit, accumulated depreciation account credit, depreciation account debit, accumulated depreciation account credit. So depreciation account debit, accumulated depreciation account credit amount we have calculated 15,000 for yearly depreciation. So depreciation account debit, accumulated depreciation account credit. So total amount of depreciation 15,000, and next journal will be for transfer to depreciation into income statement. Transfer to depreciation into income statement. That means we have to record this depreciation in income statement. So income statement debit, depreciation account credit. Income statement debit, depreciation account credits. Income statement debit, depreciation account credit. This is our fixed journal. So dear student, again I am telling for journal entries at first office equipment debit, bank account credit, then depreciation account debit, accumulated depreciation account credit, and last one income statement debit, depreciation account credit. This is the journal entries for 2019. And for 2020, if we see the question, in 2020 we don't have any purchase of new machine. That means we did not buy any new machine, so there will not be any journal entries for purchasing asset. So only we have two journal for 2020. The journal will be for depreciation. Already you have learned for depreciation, journal is depreciation account debit, depreciation account debit, accumulated depreciation account credit. Amount will be same. Amount will be same 15,000, because we are doing math in straight line method, and you know that straight line or fixed installation method means every year we have same amount of depreciation. So depreciation account debit, accumulated depreciation account credit, same journal, just repeat for 2019 also same journal, for 2020 also same journal. Then we have to transfer it in income statement. Then journal is income statement account debit, depreciation account credit. Income statement account debit, depreciation account credit. The amount will be 15,000. So this is the journal entries. Dear student, I hope all of you can, if we practice more and more, then of course the journal entries we can easily. Then our last requirement, prepare office equipment account and depreciation account. That means we have to prepare two ledger account. We have to prepare two ledger account. Number one, it is office equipment account. Number two, it is depreciation account. So dear student, for preparing office equipment account, you know that we have to prepare ledger. We have to prepare ledger. Look at, we draw the box here for ledger, it in a T format. You know that we can do ledger in traditional format also, in modern format also. Here we are doing it for T format. For doing journal, all of you know that from 9, 10, 11 class you have learned that how you can do ledger. So at first we have to do prepare office equipment account. When you prepare office equipment account, you have to write the opposite name of office equipment account in the particular column. Look at, opposite name of office equipment is bank account, so we have to write bank account here. Bank account 1,60,000 debit side, and in the credit side there is no office equipment, so balance is 1,60,000. Balance is 1,60,000. That means office equipment debit balance is 60,000. Debit side is greater than credit side. In credit side we have no balance, zero. That's why in balance sheet will be in the credit side. So for next year also same balance, because there is no office equipment here. So only one posting for office equipment, this is office equipment account debit 1,60,000, and we have posted here office equipment debit 1,60,000 and balance sheet 1,60,000. Next year opening balance 1,60,000 and closing balance also 1,60,000. I hope all of you understand. Dear student, now last one, depreciation account. Dear student, for depreciation account, look at the journal depreciation account. We have two opposite account. Here depreciation account, opposite account is accumulated depreciation account, and here depreciation account, opposite account is income statement. So we have to write the name of opposite account, you know, accumulated depreciation account, then income statement account. Opposite account, one is in the debit side, another one is credit side. Why? Look at, here depreciation account in the debit side, so we have to write in the debit side. Here depreciation account in the credit side, so we have to write it in the credit side. So look at, depreciation account, opposite account, accumulated depreciation account in the debit side, and income statement in the credit side. So balance is 0. Debit side 15,000, credit side 15,000. There is no balance CD here. For 2020, look at same thing. depreciation account debit, accumulated depreciation account credit. So in the debit side we will write accumulated depreciation account, and income statement debit, depreciation account credit. So in the credit side we will write accumulated depreciation account, and in the credit side we will write income statement. So both the side balance is equal, 15,000 and 15,000. That means no balance BD or no balance CD. I hope, dear student, all of you understand. Thank you very much. Allah Hafiz. Stay home, stay safe. May Allah help all of us.